So happy to have Martin with me today. Today, the topic is really on wealth management, and we've got an expert in the field. So I'm not going to spend any more time going through this. I'm going to pass it over to Martin. But Martin, thank you very much for joining us, and looking forward to hearing what you have to say.
Thank you, Jim. It's a pleasure to be here with you and to share some of this information with the listeners. We have a financial planning team that focuses on working with incorporated business owners and professionals. And over the last 10 years of focusing specifically in that area, we've seen some interesting trends, interesting developments, both from the government side and most recently through COVID and how COVID has affected business activity. I myself grew up in a business family, and my dad still until this day is running a business. And about 20 years ago, there was a decision of my dad encouraging me to go into business with him, actually. And I remember thinking, I don't think he's ready for retirement, which a lot of the families, business owner families, go through. And when is the time to transition and so on. Well, for anyone that is thinking of or is going through the process of transitioning from running their business and then into either partial retirement or coming into a liquidity situation, I think it's very important to understand you're leaving an area that you're an expert in, and you're going into another area where your money will be allocated, and you need to understand that environment. So I think, over the years, the business owner develops expertise and knowledge in the field. And by shining light on the next step, I think it helps in creating more confidence and a smoother transition into it. Because a business owner essentially becomes an investor, divesting from their own business into a number of businesses that you buy through an investment portfolio. And that's why I wanted to focus on. We're going through some really interesting times, and COVID has, for some businesses, actually worked out well, whereas for most businesses it hasn't. I think, or at least the ones that we are hearing, talking about that. So it's important to, I think, understand a view from the top if you are in the transition position and your business is doing quite well and you're moving on to the next part of your life, to understand what that landscape looks like. And to have a closer look, let's have a review of some of the economic metrics during the lockdown. Many people actually believe that lockdown is a negative impact, has a negative impact on everything. But if you actually think of it from a business owner point of view, business owners do like to buy assets that may be under some stress or in a situation where there is an opportunity, meaning good value, lower prices. When we have volatility in general in investment markets, that's exactly what's happening. And if I had a choice of transitioning my assets from the business, from the practice that we're currently running into retirement, I would be choosing to do it in a time where the market is at a low point, not at the high point. If, let's say, we did that a year or two ago, markets were a lot stronger, and then the markets drop after I've transitioned, that's not the best timing. So, in fact, this is a really good time for anyone who's thinking of transitioning because, as trends show us, in the long run, markets go up for about 7 years at a time. And if we just came to an end of one cycle, then a new one is about to start. And that's the way to look at it. Just so really to highlight some of the metrics that we've just gone through, it has been the longest business cycle on record. When we're looking at the U.S. economy, all the way back to 1945, you can see there in red, 147 months of expansion. That's the longest by far. So no surprise, whether it's COVID or another economic factor, there are business cycles that we follow. And this one has been the longest. So interesting from the investment point of view, we're seeing China was a country that actually was first affected by COVID. And what happened initially is they dipped in their PMI, so manufacturing index, and the dip was significant from about 50 to about 30. And it didn't last very long because this is not the usual recession. Usually, when a recession happens, we have a destruction of capital. People lose their homes, values go down, and there is a prolonged recession. Whereas this was a government-induced pause on the economy. And the expectation was that as soon as the pause is lifted, we're able to proceed as with business as usual. So, interestingly, what happened is a few weeks later, we're seeing the PMI index in China go up. So production came back and slightly higher because when you shut down some factories and you need product to people just consume on a regular basis, then you need to make that up, that volume. So different industries obviously behave in a different pattern, and we'll address that part in a little bit later. If we look closer at the US data, we're seeing that this is a weekly index for GDP. We're seeing that the impact was almost 12% negative drop. So every year the economy grows by about 2-3%, and all of a sudden it's scary when you lose about 10% in about a month or right away. There's a very steep drop initially that happened. However, as it has been happening, it was shown in China, the index is showing recovery. And this is the latest number from July. So obviously, this is nothing that will predict the future, but it's kind of what happened and just some visuals. So there was a steep drop and a recovery started to happen. In Canada, Statistics Canada came out with a forecast, which forecasts are never 100% right, or rarely they are. They're showing that any loss that will happen either at the beginning, first part of the year, or throughout this year is also expected to recover. And we just, there's stories that we hear businesses wanting to come back or being able to come back, and they have demand, pent-up demand that they need to satisfy, whether it's professionals, even dentists. People need to go to see the doctor, their dentist. They need to buy certain things, and some things we buy more of than others. Everybody's wants to get their backyard or deck or pool redone, where some orders are going into next year already, and there's a shortage of material. So that's on the positive. But other businesses that were not able, sitting at home for 4 months makes us want to go out to a restaurant. And I was out yesterday and saw a lot of activity downtown Burlington, which is great to see. So there's that expectation for things to get better. For business owners, it's also important to understand currency, and some businesses are affected by this more than others. The US dollar, generally, is a currency that has a lot of stability. So when the economy is not so good, it's bad, everybody flocks over to that stable currency. And what does that mean? So in the investment world, for example, if we are Canadians and we own investments in the US or American stocks, what we see is a greater rate of return on those investments. A higher US dollar value means, relative to the Canadian, means that the currency is making up those returns. On the flip side, if you have mortgages held in US dollars, or perhaps you bought some property already that you may be looking forward to, or you have a more property that you're financing through American dollars, that is a negative, because now your payments are slightly higher. And when we look at around the world, advanced economies have actually their percentage GDP debt in US dollars has actually been climbing quite a bit. We're doubled over the last 10 years. So it will be interesting to see what happens. However, after things stabilize, the American dollar usually drops. So if you look back at 2008, we had the financial crisis, dollar peaked, and then dollar dropped. So something that one may want to look into, if you have cash in US dollars and the American dollar is high, it may be a good time to sell that dollar for a slightly higher rate of exchange. So when COVID happened, we've also seen governments step in and make significant changes. So one of those was Bank of Canada and the US Federal Reserve lowered interest rates, and they did that aggressively. It's a common practice that they do. So when you make money less expensive, more accessible, you are able to borrow at lower costs, and that motivates us to spend money as opposed to leave it in the bank and hope that we're going to get a good interest rate on it. So this has been good, especially for businesses that needed to access a line of credit, and that line of credit helped them to get through this period. However, the money doesn't come from thin air, and what we also saw is government stepping in and creating tremendous stimulus. The American government did that, and in Canada. And in fact, this has been the largest stimulus intervention by far that we've seen on record. So if we compare what's happening right now to some of the financial crisis of 2008, the impact of that was I think, at least until now, greater. The government has been a lot more proactive. Whether that's good or bad, the government is there to stabilize things, and this has helped for people to remain calm, for a little bit more confidence in some situations. And the flip side of that is the money has to come from somewhere. When looking at Ottawa just recently announcing the deficits that the government is expecting of $300 billion versus about 20 to 30 billion that we get on a regular basis, that's 10 times more, 15 times more. And where will the money come from to repay that? So I think it's important for business owners to understand that money held, money invested. Also, you need to think that the government may change rules of how it's taxed. One of the expectations for this recent budget is that capital gains inclusion may go up from 50% to 75%. And if that happens, well, that would be one way for the government to recoup some of the money. So when you're approaching an exit from a business, and you need to, I think not necessarily that something like this will happen, but you need to take into consideration the environment that we're in and how the government may need to come up with filling in the gap in the budget. U.S. has experienced the same thing. Their debt to GDP was about 80%, and all of a sudden, this line in blue was expected to trend nicely or steadily at least, and all of a sudden they're jumping to about 100% debt to GDP, and that's also expected to climb. The longer COVID happens, the longer governments need to find ways of injecting money into the economy, and the bigger the debt, then perhaps to repay. Having said that, you should also look at what is the debt of each country relative to the gross domestic product. So in Canada, actually, we're pretty lucky. And initially, when I saw these numbers, I was a little bit surprised. I remember numbers being higher. But when you're looking at debt to GDP, when countries are over 100% debt to GDP, that's where you start getting into dangerous territory or higher risk, where Canada is at 26% to GDP. US is at 81, as I mentioned. And you look at France, Italy, Japan, they're higher. And Italy was actually hit quite a bit with COVID, so it puts them in a tougher position. One thing that also I think will change, and we've heard a little bit about that, and we're seeing some more debates between governments, is that over the last 15 years and plus, we've seen a tremendous growth of the Chinese economy. And some manufacturers or some products that are being manufactured in China, I think the government will actually rethink whether we should have them produced in China or not. Think of some of the health supplies and how difficult it was to get masks, for example. They may become products that are of interest to the security of the nation. And one person said, actually, one economist said that COVID may be the last nail in the coffin of globalization, which has been happening for the last few decades, and how that was promoted. I think countries may start looking inwardly, and some of the business owners may actually benefit from that, because even though it is not maybe as economically profitable, maybe cheaper to produce in China, but it will be better for some business owners to do that. So this is something that's playing out, and we're seeing U.S. and China closing down consulates and getting into a little bit of that tit for tat argument. So on this part, Jim, this is I think I wanted to create this as a base for everyone to kind of have an understanding, because if you are a business owner and you're going from owning a business, then you're rolling over your assets somewhere else. It's important to understand the environment that we're in.
Thanks for this, Martin. You know, I really appreciate, you painting the path from kind of the inception of COVID to where we are today. And just a couple of questions regarding China-US political relations. Um, just curious how you see this playing out in Canada. Because, we've got a client in manufacturing, and what we've recently learned is that it's creating opportunity north of the border, only because there's obviously tension between the two countries. Doesn't look very good when U.S. is sending China work and outsourcing, and so where do they look? They look north of the border. What are you hearing, or what's your sense on the impact of Canada?
So these are very early stages of what we are seeing. At this point, this I think if I am a business owner who is actually thinking is in manufacturing or thinking of being in manufacturing, I would be keeping my ears open, very open, listening to what the government is thinking in the background, because some of the policies that they may introduce may be pretty swift. You've seen that with Huawei, with how 5G networks were being developed by one company in China, and all of a sudden, countries around the world are saying we're not going to use their technology, even though they are the most advanced company that is producing this. And all of a sudden, governments are motivating companies to get into a specific field that they may have not invested so much before, because it's of interest, of security interest, or it's critical that they are independent and not so dependent on another nation that has a different ideology. That's what it really boils down to. China does have so if you keep at the same pace as China's growth has been over the last 20 years, that they become a superpower. They start dictating the rules around the world. So whether you like it or not, you then have to adhere to that. So governments, it's more of a political approach as opposed to business, but it's somewhat speculative as well, not knowing exactly what will happen outside of regular dynamics of the market. But whether it's on the 5G, which is a higher level, Nortel would have been a great company for that if it was around still. But there will be other fields that will probably open up.
No, I appreciate that. So I guess a follow-up question to this, and you touched on it regarding business owners who are looking to retire. I mean, on one side, you've got some uncertainty, and folks are concerned that, hey, maybe I'm not going to get full value for my business. But you also mentioned that now's a good time, if you can divest and you can get a fair market value for your business or something close to it, there's an opportunity in the marketplace. Can you speak a little bit about what that looks like, and I guess taking a long-term approach view?
Absolutely. So our team focuses on assisting business owners who are considering that maybe now is the time to exit from my business, and that process can last. If some businesses are ready, it will be quick. Some other businesses will take a few years. However, at the same time as that is happening, our team focuses on assisting the business owner in developing certainty that if I take my assets out of my business and I do retire or I transition, I sell my business, will there be enough revenue and stable income that I can live off of and enjoy a lifestyle now? And how much do I need to live? It could be a change in lifestyle. It could be just making sure what will my paycheck be. That's the job of our team. It's not only that of how much money do I have and how much going to use out of it, And this is a technical presentation more focused on the economics, but it's important to understand the tax environment. So, meaning that if I have $5 million that I have from a sale of a business, or $1 million, whatever that amount will be, there is a way of arranging finances that are based on the goals that each individual has that will be at a lower tax rate. So financial plans are built in order to satisfy the goals and the needs of a family. By understanding those goals and needs, then we're able to create a path of least resistance. And if you create a path, if you don't think about that ahead, if you don't ask the right questions, or it's actually more important that somebody helps you figure out what the right questions to ask are. So by creating a team of individuals that are helping you through the process, from our point of view, the job of our team is to create that certainty for what they will be able to, or what they should do, and how they should arrange their finances a step further, which then becomes an easier thing for them to decide whether this is the right time for them to exit, and especially during times like this. So, for example, if we are in a market correction, and the markets have been volatile, both down and up, but if we do have another wave of COVID, which will perhaps bring markets down lower, that is a very attractive time to transition. If I can buy assets at 30% discount, or perhaps even 40% discount, that's the opportunity. Because even if I am in a position where maybe with negotiations, my business may be doing really well and somebody is not necessarily needing a deal to lower the price on it. But if a lower price on selling my business, maybe by 5%, helps the deal to happen, I'm transitioning my assets to another place where I'm going to be entering at a 20% discount or 30% discount. So the net result is you're further ahead. And that's important it is easy as business owners, especially, we deal with a lot of challenges, and to just be myopically focused on our own situation and the stress that we may get. But you also have to be aware of the greater environment, and that's where these conversations assist business owners.
No, that's a great perspective. Look at the big picture. You got to look at all the various elements that feed into the equation. If folks do want to reach out to you, what's the best way for them to connect?
Anyone is welcome to get in touch with us that is in a position where they are looking at creating a more certain exit strategy for themselves, and to not only exit from the business, but we are the relationships. You take care of that transition, whereas we take care of what will happen afterwards. So we essentially are the individuals that help business owners in developing the new path. So they start a relationship with us as they start a new path in their life, and the chapter in their life. So whether it's by email or through the social media, they're welcome to have a look of what we do and who we are, who we deal with, and have a conversation about that.
Great. Thanks, Martin. Looking forward to the next segment.
Thank you, Jim.